everyone, welcome to the California Competes application workshop for fiscal year 2025-2026, hosted by the Governor's Office of Business and Economic Development. My name is Sarah and I will be presenting this webinar with my colleague Brandon. Here's the agenda for this webinar. We will discuss the California Competes tax credit program information, our evaluation factors, the application deadlines, process, and guide. Then later on, my colleague Brandon will go over an example business where he will walk you through an example application with some actual numbers. The California Competes tax credit is available for businesses that are creating quality full-time jobs in California. The tax credit, which is an income tax credit, is applied against the taxes owed to the Franchise Tax Board. It is a non-refundable credit and has a 6-year carry-forward period. So you have 6 additional years to claim any remaining tax credit amounts that have not been used. For example, if you are approved to claim $100,000 in credit, but your tax liability is only $75,000, the remaining balance of $25,000 will not result in a check but can carry over year by year until it is used or until 6 years have lapsed, whichever comes first. The California Competes program holds accountability tied to an agreement which outlines hiring and investment commitments. The company must meet these commitments to claim the credits. If the company is unable to meet those commitments, the tax credits could be recaptured by the California Competes program. In the statute that created the California Competes program, there are specific evaluation criteria. It is important to remember that first and foremost, CalCompetes is a full-time job creation incentive program. All factors are on the screen in no particular order. Some of these factors include number of jobs created or retained in California, compensation paid to employees, training opportunities offered to employees, and commitment to treating workforce fairly and creating quality full-time wage and salary jobs. Recently, the legislature added the extent to which the credit will influence the applicant's decision to relocate jobs into California from states that have enacted laws that permit discrimination based on sexual orientation, gender identity, or gender expression, or that deny or interfere with women's reproductive rights. The California Competes program is required to evaluate the extent to which the credit will influence the applicant's ability and/or willingness to create new full-time jobs in California that might not otherwise be created by the applicant or another California business. Is this credit going to be a material factor in your company's decision to expand and create new full-time jobs in California? Is this going to be a material factor to incentivize the creation of new jobs that would otherwise not be created? A key part of this program is demonstrating why you need the credit and how the amount you are requesting is going to help your business make the decision to expand in California or expand at all. Tell us about your decision-making process and provide a rationale for the amount the business is requesting. More competitive applications will make strong connections between the amount requested, the project, and the rationale behind it. The Frequently Asked Questions document provides additional guidance on this, which you can find on our website under Resources. California Competes tax credit availability. There is 180 million tax credits available per fiscal year. The minimum credit request is $20,000, and no more than 20% of the available credits will be able to go to any one applicant per fiscal year. Currently, that value is 184.5 million. These are the parameters you can ask for in your application. We have over $922 million in California Competes tax credit available for allocation in the 2025-26 fiscal year. The funds are portioned between 3 application periods, which are listed here. The application for the CalCompetes tax credit is completely online and can be found at calcompetes.ca.gov. You can find application tutorial videos, FAQs, an application guide, and a variety of resources on our website. Unsuccessful applicants may resubmit applications after updating the employee and investment sections and the current tax year. You may apply for the tax credit as many times as you wish during open rounds, and there is no penalty or limit to the number of times you can apply. Let's go over the application and award process. We have a 4-phase process, starting with phase 1, which is based on a quantitative analysis and a cost-benefit ratio. If you advance to phase 2, it becomes more of a comprehensive evaluation with additional factors and the phase 1 ratio calculation. There is the agreement phase after phase 2, which will show the commitments made by the business and must ultimately be approved by the California Competes Tax Credit Committee. Once awarded, the business will have annual reporting requirements with GO-Biz and the Franchise Tax Board. Phase 1 evaluation is based on the cost-benefit ratio, which is defined as the amount of credit requested divided by the sum of the aggregate employee compensation and aggregate investment. The aggregate employee compensation is the total of the wages you'll be paying to your employees during the life of the agreement. Aggregate investment is the total amount of the investments made during the life of the agreement. Applications with the most advantageous cost-benefit ratio will move into phase 2, and the top 200% of applicants will be reviewed. So for example, if we have $150 million available in tax credits, the first $300 million in credit requests will move forward into phase 2. There are some exemptions to the cost-benefit ratio. GO-Biz may move an application into phase 2 regardless of the ratio if the applicant certifies one of these options. First, absent award of the credit, so without award of the tax credit, the applicant's project may or will occur out of the state, or the applicant may or will terminate or relocate all or a portion of its employees to another state. If you can certify that you are in a high unemployment, high poverty area, which is defined as at least 75% of the applicant's net increase of full-time employees will work at least 75% of the time in an area of high unemployment or high poverty, then you qualify for the second exemption and your application will move into phase 2. If moved into phase 2 based on one of these exemptions, you will be required to submit a signed affidavit certifying this is truly the case. These are the legal definitions of high poverty and high unemployment areas. High poverty and high unemployment areas are a city and/or a county in California with a poverty or unemployment rate of at least 150% of the California average. Now, when you're completing this portion of the application, there will be a link you can click on that will show you all the cities and counties that qualify. This is not a requirement to apply. This is just for businesses that are planning to create new full-time jobs in an area of high poverty or high unemployment. If your city or county is not on this list, then your project does not meet these criteria and will be evaluated on the remaining evaluation factors. The Phase 2 evaluation will look at these additional factors, which are listed on the screen in no particular order. In addition to the information submitted in Phase 1, we will be looking at additional factors such as wages, benefits, training opportunities, and economic impact of your project. The most competitive applications in the application period will move to the agreement phase. This is where the terms and conditions of the agreement are defined. It will list the number of jobs created, the minimum wages, average wages, and investment commitments for each year of the agreement. It will also outline the credit distribution period. The agreement will state what the recapture provisions are if the company fails to meet those commitments. All agreements need to be approved by the California Competes Tax Credit Committee, which is composed of the State Treasurer, Director of the Department of Finance, 2 legislative appointees, and the Director of GO-Biz. This is a milestone chart and is the last page of each agreement. It lays out all the commitments the business agreed to. It lists the number of jobs to be created, the minimum and average wages, the investment commitments, and the tax credit allocations for each year during the distribution period. After the committee has approved the agreement, we will post the agreement on our website. We do not post your application, but we do post the agreement that shows what the commitments are. Please visit our website resources to see the agreements of over 1,100 past awardees. The Franchise Tax Board is responsible for the oversight and accountability of the program. FTB will have access to the application and all documentation. FTB will review your books and records for agreement compliance. This is not considered an audit. It is a review of the books and records, which include payroll records and investment documents to validate job creation, wages, and capital investments that you committed to. FTB will inform GO-Biz if it has found that the company is in material breach. GO-Biz will work with you to avoid material breach and the recapture of the credit. The committee will ultimately approve or deny the recommended recapture. We will now go over some of the definitions before Brandon takes over and presents the application itself and walks us through a sample application. Our first definition is project. The project is the proposed business venture that will result in new jobs and increased investments in California. We use this term frequently, and ultimately, this is your 5-year growth plan that you outline in your application. Some examples could be adding a new manufacturing line, adding a new location of your business, or starting a new business from scratch. The applicant is the legal name of the business that is registered with the California Secretary of State or is otherwise legally authorized to do business in California. The base year is the company's most recently completed tax year. If you are a calendar filer, your base year is 2024, as that is the most recently completed tax year. For fiscal filers, your most recently completed tax year will vary depending on your tax year end date. The California Competes program is a full-time employee growth program. We only want to know about the job creation of full-time jobs. Please do not include part-time employees in your growth plan. The term full-time employees refers to a W-2 employee who has been paid wages for services in California of not less than an average of 35 hours per week. Do not include any temporary workers or 1099 contractors. Annual full-time equivalent is a way to account for full-time employees that worked or will work less than a full year during the taxable year. For example, let's say you have a full-time employee that works a full year. They would be considered a 1 on an annual full-time equivalent basis. If you had an employee that worked half a year, maybe they were hired on July 1st and worked through the end of the year, they would be considered a 0.5 on an annual full-time equivalent basis. Aggregate employee compensation, which was mentioned earlier, accounts for wages of new full-time employees for the full 5 years of the agreement. Wages is the term that defines the amount of monetary compensation a full-time employee is paid by the applicant, whether paid by the hour or by salary. Please only include the base wage. Do not include any other compensation such as tips, overtime, or bonus compensation. Investment is defined as the amount paid for real and personal property purchased or leased after the close of the current application period. Investments are broken up into 2 types. Real property can be land or anything attached to it. For an example, an office building, tenant improvements, or construction would all be considered real property. Personal property is property that is tangible, movable property. This could include computers, furniture and fixtures, vehicles, software licenses, and manufacturing equipment. Things that would not qualify as personal property or investments are things like the cost of gas, the cost of labor, or office supplies, and that should therefore not be included in the investment section. To complete the application for the California Competes Tax Credit Program, you will need the payroll records of your full-time employees for the most recently completed tax year. This will be considered your base year. You will also need your 5-year business plan, including the number of jobs you will create, the job classifications and wages, and you will also include your investment commitments for the next 5 years. Now I'm going to pass it over to my colleague Brandon, who will go through creating an account and completing an application.
Hello, my name is Brandon and I'll be taking you through the rest of the application. So in order to work on an application, the first thing I'll have to do is create an account. The application website is www.calcompetes.ca.gov. On this page, you'll want to enter your information and be sure to enter the email address that you plan to use when you log into the application. When this is complete, click Create Account. Once you have created your account, you will be able to log into the CalCompetes application portal. To log in after creating your account, you will need to enter your email. Note there won't be any passwords to remember as your system will send a unique 6-digit key as shown on the slide to your listed email address each time you log in. If you don't receive the key within 30 seconds, it more than likely went to your spam folder. This is the landing page you will see once you have successfully logged in. Here, you will be able to create a new application, or if you're a returning user, you will have access to any prior applications that you have worked on. Now, to create an application, you'll plug in your legal business name, and also indicate if the business has previously been awarded. Additionally, you will indicate the applicant's current tax year accounting period end date, as in the calendar year or fiscal year, and then you will click Create Application. This is the home page you'll see after creating your application. You'll notice everything is red on the right side. As you complete each section, it will turn to yellow or in progress. And once you press the complete button, the color will turn green. You will not be able to submit until all sections are colored green. You'll notice that it is currently grayed out. On the bottom, you will see an options button. If you have multiple people who need access and make changes to the application, you can add them as users as long as they have already created an account. The report function will create a PDF of the application. The contact information is the first section of the application. The section is pretty straightforward, but please be sure to have multiple contacts added if possible who can speak on behalf of your company. We have had several instances where we've had difficulty getting a hold of people. The primary might be sick, on vacation, or whatever the issue might be. We are required to operate on very short and tight deadlines that is required for the various phases of the application. If we cannot get information from a business, unfortunately, it can and has resulted in the loss of a potential award for companies not responding on time. This section, again, is pretty straightforward. You'll plug in your information for primary place of business. We do ask on the bottom to provide your NAICS code. You'll need to visit the NAICS website to find your appropriate industry code. The link is embedded in the application. The code is more for our internal information, but will identify the industry as well as the project. On this section, you will tell us your business structure. Where is the entity registered? The entity type will give a drop-down selection, so LLC, S Corp, C Corp, sole prop, whatever. Just let us know what kind of business you are. And again, this is for identification purposes only. There is some logic built into this application. These fields will generate further questions to answer depending on that response. These are the type of questions that will be populated for an S corporation. And again, these questions would be, is the applicant publicly traded? Is the applicant incorporated or otherwise qualified to do business here in California? This is the qualitative part of the application. Now there's a lot to take in here. The first text box is where you'll describe and give us a narrative about your company and your project. Why is this award, and in this case, a tax credit, necessary to create X number of jobs in California that may not otherwise happen without the credit? The box looks small, but it will expand and allows for about 7,000 characters or about 2 pages in a Word document. You have a lot of space here to describe who you are, your customers, what your plans are for California, and how this award can help you get to where you want to be. This is really the part where applicants can help make themselves stand out to other businesses. Remember, this is a competitive application process, and you are competing against all other applications. This proposed project section allows from an analytical standpoint where the tax credits are going to have the most impact. Remember, these are public tax dollars. We want to make sure it's used in the most effective way possible. Another thing, if you're requesting, let's just say 10 million, tell us why you're requesting that amount. How did you arrive at that number? Why not 5 million or 1 million? Why is this the amount that will make a project viable for you in California? Just remember, more detail is better here. If you are looking out of state, tell us your options. Tell us the quantitative differences and what steps have been made. Again, this is not a writing contest by any means, but please paint a complete narrative for us to understand. Below that, you'll see the it will and it may statements that can automatically move an application to phase 2. Will the project move to another state? Will the applicant terminate employees? If you indicate this, please note you will need to sign an affidavit under penalty of perjury that this is indeed the case. There are some additional questions that have been added to the application due to changes in the statutes. We may evaluate if the company is proposing to relocate employees from a state that has taken action with regards to civil rights of LGBTQIA plus individuals or women's reproductive rights. If you are proposing to relocate from a state that has enacted laws on these issues, please indicate so in this box and provide details in the proposed project summary. This has further yes and no questions regarding a proposed project. On the very bottom, you'll see an empty box for the total amount of California Competes tax credit being requested. This is where you will tell us over the next 5 years how much you're requesting. So if you are seeking 100,000 a year, do not put 100,000 in this box. You'll put 500,000. Understand that this is the total requested again over a 5-year period. Please keep in mind the minimum and maximums mentioned earlier in this presentation. Proposed locations. Just let us know where the jobs are going to be created. If there are multiple locations, please choose one as the main where the majority of the job growth will occur. If you are uncertain but have at least a general idea, please narrow it down the best you can. Is it in Southern California, Northern California, the greater Los Angeles area, the Bay Area? Just give us a general idea. This is the employees section. As mentioned previously, this is where you'll want your payroll information and business plan readily available to reference. Report your existing number of full-time employees in California as of today. For question 2, we ask for the existing number of part-time employees in California. This is the only part of the application where we ask about part-time employees, simply because we want to know if you're primarily a full-time employer or a part-time employer or a mix of both. Questions 3 and 4 just tell us the combined part-time, full-time total employees in the US and worldwide. This will enable us to know the size of your business. Then you'll tell us your hiring plans the next 5 years moving forward, but I will expand on this topic later when we talk about our fictitious business. For the investment section, you'll tell us how much you plan to invest in the next 5 years in California. Just as a reminder that the first year, the current tax year, needs to be after the last day of the application period. Anything you may have committed before the application period will not count. For the ownership section, please tell us who owns the business if the ownership percentage is greater than 25%. In the incentive and program section, we encourage you to look into these other programs that might be of benefit for your business. Let us know what other incentives your business might be utilizing and planning to utilize any of these other programs as part of your comprehensive plan to grow here in California. The litigation and violation page is the help us help you section of the application. When you go through the question, please let us know if any of these are applicable to you. If your business has been involved or owner has been involved in any material litigation in the last 10 years, please describe it to us in the box included. Now, in no shape does it automatically disqualify. We understand that obviously any business operating at any size in California or the United States will likely go through some sort of material litigation of some sort as part of its general operations. It happens and we understand, but please provide an explanation to us of what happened and how it was ultimately resolved. If you are using a consultant to prepare or submit this application, please let us know the fee structure or arrangement here. If you move to phase 2, we will ask for a copy of that arrangement with the consultant. Once you've gone through the application, all sections will be green and the submit button will no longer be grayed out and will now be available to click. please be sure to click the Submit button. You will have to agree to the conditions, so please review this page closely. Once it's been reviewed, click Submit. If you have successfully submitted your application, this is the confirmation email that you will see after successful submission. Lastly, we will go through an example application. So this is an example application for a fictitious business known as Widget Manufacturing. Widget has 50 full-time and 3 part-time employees, so a small to mid-sized company. It plans to hire a total of 30 full-time hourly employees over the next 5 years. It will hire 5 hourly employees in both its 2025 tax year and 2026 tax year. It plans to further ramp up hiring in its 2027 tax year with 20 hourly employees. The proposed employees will be paid wages of at least $45,000 and an average of $60,000 on an annualized basis. Additionally, it plans to hire 5 full-time salaried employees in both its 2028 and 2029 tax year. These employees will be paid wages of at least $90,000. And it will invest $10 million in tax year 2026 for a new facility and $7,660,000 in tax year 2027 for manufacturing equipment that will be installed in that new facility. This is the project description for Widget. Now, I won't read this for you verbatim. Widget is a manufacturing company located in the city of Anonymous, and they have seen consistent growth over time, and manufacturing is currently at capacity, and they need to expand to meet client demand. So relatively generic so far. It moves on to tell us what the proposed project is, and it is expected to cost $10 million. The project will include some investment costs that it outlines, and they anticipate hiring 40 total employees. They then outline that they are exploring all options, including out-of-state ones. It mentions its customer base and that it's not regionally tied to California. From my perspective, try to go into more detail than Widget did. I'll start with the last part as an example. Tell us why you're requesting 1.1 million, as it doesn't tell us how they arrived at that amount. Why did they ask for that amount? That would be one of the first questions that we would ask as part of that review. Is that the difference in the operating costs over the next 5 years? What are those operating costs? If you were to open in, let's just say, Nevada, would the energy costs be higher? And does that factor into the amount of credit being requested? Whatever that rationale is, please describe that in this section here. It really helps us understand. And in general, more detail would be better. This is the very bottom of the project description, and this is where Widget will enter the requested amount. Now we've come to the employee section. Like I stated earlier, they have 50 full-time employees currently. That is the current headcount. They have 3 part-time employees, and again, this is the only time in the application we'll be asking about those part-time employees. The existing part-time and full-time employee count is 53. Now it plans on hiring 5 employees according to question 5 in current tax year 2025. These employees will make at least 45,000 minimum and an average of 60,000 on an annualized basis. You'll see question 8 will be the number of employees hired after the last day of the application. If you're wondering when the last day of the application period is, you can find that on our website or in the online application. In this case, all 5 of those proposed employees would be hired after the last day of the application. According to its business plan, it plans to hire another 5 employees in the 2026 tax year. These employees will make at least 45,000 minimum and an average of 60,000 on an annualized basis. For the 2027 tax year, it plans to hire an additional 20 employees at a similar annual wage. In 2028 and 2029, the business plan outlined hiring 5 full-time salaried employees each of those years, which is what you see here. These employees will make at least $90,000 a year. This is what I would call the employment section. As mentioned by my colleague earlier, the section is where you'll want your payroll records nearby. For the base year, you'll use payroll data from your previous tax year, which in this case is the 2024 tax year. The books are closed, so they can't sort their payroll data to identify all hourly full-time employees for Section 22. These are hourly full-time employees that worked at least 1,750 hours or more during the 2024 tax year. In this case, Widget sorted its payroll data, and 32 hourly employees would fall under this bucket. They would then resort for each of the categories below. Question 23, they have 12 who worked on a salaried basis at least 50 weeks or more in 2024. They resort payroll data again and look at the hourly full-time employees that worked less than 1,750 hours during 2024. Again, these are all full-time employees, but maybe they had 7 individuals who started the year with them, left the company, terminated, and maybe they even hired some other individuals midway through the year to replace. All these employees would fall into this bucket. Question 25 asks the total number of hours worked by these employees. So you would take the total number of hours worked for those 7. In this case, they report 5,964 total hours worked for those 7. Our system will divide that by 1,750 hours to get an annual full-time equivalent for those identified 7 employees. Same with question 26, but they had 3 salaried employees that worked part of the year, and they worked a total of 48 weeks according to question 27. So for 2025, they will do the same thing, but will be using employment projections for 2025 and onwards. They expect 36 to work the entire year on an hourly basis for question 28. For question 29, they have 14 salaried individuals working the entire year. For question 30, you'll see they have those 5 new employees they plan to hire in 2025. Now, they don't expect any of them really to work more than 1,750 hours. They're planning on average, it looks like, to be hired part way through the year. They don't think any of them will qualify for question 28. So for question 31, of those 5, they think those 5 will work a total of 2,500 hours in 2025. The system will take that and average 500 hours per employee and come up with an annual full-time equivalent for those employees. You'll see here the system's calculation for AFTE, or annual full-time equivalent, on the very bottom. Based on the base year, it looks roughly a net of 3 employees for 2025. For the 2026 tax year, Widget will carry forward those 5 new hourly employees from tax year 2025. They will now fall under the bucket of now working the entire year or more than 1,750 hours. So now they have a total of 41, as you can see here. Question number 35, they will have 14 employees working a salaried basis for the entire year. It will again hire an additional 5 hourly employees mid-year, working a total of approximately 2,500 hours. So now they have a total of 56 employees for the 2026 tax year on an annual full-time equivalent basis. The 2027 tax year is a big projected hiring year for Widget. Remember, they intended to purchase a new facility as part of the 2026 tax year investment? Well, to fill that new facility, they expect to hire 20 hourly full-time employees. These employees will work part of the year for a total of 10,000 hours. Based on projections, that comes out to about 500 hours in a year per employee. In the next year, 2028, they carry forward the 20 hourly employees hired in 2027, and now you'll see in question 46 the total is 66. The previous year was 46. It also plans to hire a total of 5 salaried full-time employees that will work a total of 150 weeks during the tax year. Projections would put it at each employee working about 30 weeks in a year. they have gone from 48 in its base year up to 83 in 2028. That is a net growth of approximately 35 individuals on an AFTE basis. In the 2029 tax year, they carry forward the 5 employees hired in 2028. That is why you will see the salaried employees working majority of the year going from 14 to 19 in question 53. The final year, they plan on hiring 5 additional full-time salaried employees working a part of the year, putting the total at 88 full-time equivalents, or a net increase of 40 from the base year. The aggregate employee compensation will calculate when you complete the section. In this case, it's 6.6 million. Their investments they project, as they stated before, the new facility will cost approximately 10 million in 2026, with additional machinery investments in 2027 for an aggregate total of 17.66 million in investments. You can see how the investment has been structured in the section above. Now that we know their credit request of 1.1 million, the aggregate employee compensation of 6.6 million, and their aggregate investment, which was 17.6 million, the system will now be able to come up with a ratio. This ratio is what will be used to help determine whether the application moves to phase 2. So widget manufacturing's ratio, which is the credit request divided by the aggregate compensation and investment, the ratio in this case is 0.045. Now, is that good? Is that bad? Know that the cost-benefit ratio changes each round. We never know what the cutoff ratio to go into phase 2 is going to be. Sometimes this ratio will be good. Maybe in other rounds it may not be as competitive. To give you some historical information, if we were to look at the last 4 application periods, in this case, 0.045 would have met the cost-benefit ratio to advance to phase 2 in the previous tax round. Remember, that being said, there are exemptions to the phase 1 calculation. We do post all of our historical ratios on our website under the FAQ document. If widget was offered an agreement, this would be the milestone chart found on the last page of a signed agreement. Their base year was 48 individuals. This is everything straight from their application. That is how we essentially develop the agreements. Whatever the business says in its application they are committing to will get pulled into this milestone chart. So if you look at it column by column, if widget gets to those 51 total California full-time employees in 2025, pay those new 3 employees at least 45,000 and an average of 60,000. Now, they don't have any investment commitments to make in that year, and that's fine. But if they do that hiring and wage requirement, they will get to claim that 82,500 tax credit on their tax return for 2025. That following year, if they grow to 56 employees on an AFTE basis, they pay those 8 new employees at least 45,000 and an average of 60,000 and make that investment of 10 million that they said they would do. If they do all those things, then they will be eligible to claim another 137,500 credit on their tax return. Now, that is the neat thing about CalCompetes. Let's just say if Widget had a change of business plan and something occurred in 2025, say they didn't meet hiring expectations or couldn't find the right employee or wages were lower than expected. If they catch up the following year, they may not have been able to claim the 82,500 in 2025, but if they catch up the following year and meet the milestones in 2026, they can potentially claim the 2025 and 2026 allocations on their 2026 tax return. Widget essentially has all 5 years to catch up. Now that concludes the presentation. That being said, if you have any questions at any point during the application, please give us a call. Our phone number is 916-322-4051. And also you can reach us by email at calcompetes@gobiz.ca.gov. Thank you.